It's March of 2023, and you've just been rejected for the Apple Card. Not for a mortgage, not for a car loan. For a credit card with a 2% cashback offer and a titanium finish, the rejection screen says we were unable to approve your application. That's it. No score threshold. No explanation. Goldman Sachs, the bank behind every Apple Card, doesn't publish a minimum. Apple's support page doesn't list one, and if you call, the rep reads you the same script. Decisions are based on multiple factors. But here's what they don't say out loud. There is a number, and based on approval data from tens of thousands of real applicants, collected by credit researchers and consumer finance analysts, that number sits right around 670. That's the practical floor. Below it, the odds of approval drop close to zero. Above it, something more complicated happens, and that's the part nobody explains. This video is for educational purposes only, not financial advice. Now let's get into what Goldman is actually looking at, and why the score is just the beginning. The Apple Card launched in August of 2019. Apple partnered with Goldman Sachs, which was making a big public push into consumer lending through its Marcus platform. The pitch was simple: a card designed for people who live inside the Apple ecosystem with no fees, daily cashback, and privacy. First, design. Your card number doesn't even exist on the physical card. Now, Goldman Sachs is not a traditional consumer bank. Before the Apple Card, they mostly served institutional clients and high-net-worth individuals. Consumer credit underwriting was new territory. So they built a model, and that model is stricter than most people expect from what looks like a lifestyle product. Here's how the credit card approval process works at any bank. They pull your credit report from one of the three major bureaus: Equifax, Experian, or TransUnion. Goldman primarily uses TransUnion for the Apple Card, which matters because your score can vary by 20 to 40 points across bureaus. They run that score through their underwriting model alongside other variables: your income, your existing debt load, your credit utilization ratio, your number of recent inquiries, and how long you've had credit. The Fair Isaac Corporation, FICO, is the scoring model most lenders use. Scores run from 300 to 850. Good credit officially starts at 670 under FICO's own classification system, and that 670 number keeps showing up in Apple Card approval data for a reason. So here's the first thing most people get wrong. They assume Apple Card is lenient because it's a consumer tech product. It's not. Goldman has quietly become one of the more selective issuers in the mass-market credit card space. Drop a comment right now. What score were you at when you applied for the Apple Card? Approved or denied? I want to see the real numbers in this thread. Let's break this down into layers, because the score threshold is only layer 1. Across crowdsourced approval data compiled by sites like Credit Karma and Wallet Hub, and from consumer reports submitted to the Consumer Financial Protection Bureau, the pattern is consistent. Applicants with scores below 670 are rejected at an extremely high rate, somewhere above 90%. Between 670 and 700, approvals start happening, but they're not guaranteed. Above 700, approval rates rise significantly. Above 750, you're looking at near certain approval, assuming nothing else in your file is a problem. Here's the number Goldman doesn't publish, but the data keeps showing: 699. That's the soft line between likely rejected with a reasonable explanation and approved with a lower limit. Applications that come in between 670 and 699 often get approved for credit limits as low as $250. Goldman is testing the relationship. But if your score is 720 and you still get rejected, that's when layer 2 kicks in. Goldman's underwriting model doesn't just weigh your score. It looks at credit utilization, which is the ratio of your current balances to your total credit limits. The conventional advice says keep it under 30%. For the Apple Card, the practical target is closer to 15 to 20%. That's tighter than most cards require. If your utilization is sitting at 45%, Goldman may reject you even with a 720 score. They're not just asking, is this person creditworthy? They're asking, is this person financially stretched right now? Inquiries matter too. A hard inquiry stays on your credit report for 2 years and affects your score for 12 months. Goldman's model, based on approval patterns, appears to have a threshold of around 4 to 6 hard inquiries in the past 12 months. If you've been shopping for credit, a car loan, a personal loan, and 2 other credit cards, those inquiries signal something. Even if each decision was reasonable, the pattern looks like financial pressure. There's a third hidden disqualifier that almost nobody talks about: bankruptcies. Even if they're discharged and your score has recovered, Goldman has shown a strong pattern of rejecting applicants with a bankruptcy in the past 4 to 5 years, regardless of score. This is technically legal under the Equal Credit Opportunity Act, which prohibits discrimination on protected characteristics but allows denial based on credit history, including past bankruptcy. A 740 score rebuilt after a Chapter 7 bankruptcy filed 3 years ago has a much lower approval probability than a 740 score with no bankruptcy history at all. That's not widely known, and it matters. Goldman asks for your annual income during the application. They don't independently verify it in most cases, but they use it to calculate a proxy debt-to-income ratio, which is another real variable in the underwriting model. The standard recommended threshold is a debt-to-income ratio below 36%. Goldman's Apple Card underwriting appears to penalize applicants at ratios above 40%. So if your stated income is $60,000 a year, and your existing monthly debt payments total around $2,000, that's a 40% debt-to-income ratio. Even with a 710 score, you may face rejection or a very low credit limit. This is where people get confused. They see a credit card application and they think it's just about the score. It's not. It's a snapshot of your entire financial picture at this exact moment in time. If this is changing how you think about credit card underwriting, and you want to understand the other moves lenders count on you not knowing, this is exactly what we break down here every week. Subscribe and you'll get one of these every week, built specifically for people who are still building their financial foundation, not people who already have it figured out. Here's something Goldman actually does provide that most applicants skip. Before you submit a full application, which triggers a hard inquiry, you can check whether you're likely to be approved through a soft pull. On the Apple Card application page, there's a stage where Goldman runs what's essentially a pre-qualification check. It does not affect your score at all. If the pre-qualification comes back positive, Goldman is signaling that your profile clears their basic threshold. The full hard inquiry then happens when you actually accept the terms. If pre-qualification returns neutral or negative signals, you can walk away with your score completely intact. Most people don't know this distinction exists. They apply cold, take the hard inquiry hit, get rejected, and then their score drops by 5 to 8 points right at the moment they can least afford it. Under the Fair Credit Reporting Act, lenders are required to disclose whether a pull is hard or soft. Goldman complies with this, but they don't exactly wave a banner about the soft pull option. Getting approved is only half the story. Goldman's credit limit decisions are just as algorithmically driven as the approval itself, and there's a specific pattern in how they grow, or don't grow, your limit over time. New Apple Card accounts often start with limits between $250 and $1,000 for borderline applicants, and between $2,000 and $5,000 for solid approvals in the $700 to $750 range. Accounts above $750 with clean utilization often start at $5,000 to $10,000. But here's what's interesting. Goldman uses an automatic credit limit increase algorithm that runs approximately every 6 months. It's triggered by on-time payment history with Apple Card itself, a decrease in your utilization across all accounts, and an absence of new derogatory marks. You can also manually request a credit limit increase through the Wallet app, but Goldman performs a hard inquiry for manual increase requests. That's different from many issuers who use soft pulls for limit increases. So if you're planning to ask for a limit increase, time it carefully. Don't do it if you've had any other recent inquiries, and don't do it within the first 6 months of having the card. Concrete moves. 2 of them. First, before you apply for the Apple Card, or any card right now, pull your TransUnion score specifically, because that's the bureau Goldman leans on. You can do this for free through annualcreditreport.com, which is the official federally mandated site under the Fair and Accurate Credit Transactions Act, or through Credit Karma, which gives you free TransUnion and Equifax scores updated weekly. If your TransUnion score is below 670, don't apply yet. Spend 60 to 90 days paying down utilization first. Even dropping utilization from 40% to under 20% can move your score 15 to 30 points without any new accounts. Second, if your score is in the 670 to 700 range and you want to apply anyway, use the soft pull pre-qualification step. Do not skip it. Go into the application, enter your information, and stop before you hit the final submit button. Goldman will surface preliminary signals before the hard inquiry fires. If you see language suggesting the application is likely to be reviewed favorably, proceed. If you see hedged language about additional review required, consider waiting another 30 to 60 days to improve your file before taking the hard inquiry hit. Some people in this situation also choose to build their profile with a secured card first. Products like the Discover It Secured or the Capital One Platinum Secured, which report to all three bureaus and help build both score and credit history without the risk of a hard inquiry rejection. The number Goldman won't publish is 670, and now you know exactly why and what surrounds it. The score is the door. Your utilization, your inquiries, your income ratio, and your history are the lock. Drop a comment. Did this change anything about when you're planning to apply? I read these. Next, the credit utilization trick that moves your score faster than anything else, and why most people do it completely backwards. It's already on the channel.